How's it going?
Okay.
Okay, let's set the stage. So, Kelly, what would you say is different about selling a dental practice in 2025 compared to, say, 5 to 10 years ago?
As far as what exactly? From a doctor's point of view, or from a dental practice owner point of view, or from a
From a
broker's
broker's
point of
point
view?
of view, I think. Or, or,
Um,
or whatever you could offer on the dentist side too. I think either from a dentist's perspective or from a broker's perspective, what's different
well,
now?
we can do both. I mean, I think from a dentist perspective, most of the time what would happen is some dentists would go through a bigger broker like Paragon or AFCO. I don't know if Kane Waters has a brokerage, but one of the bigger groups they would go to help sell their practice, and they would they'll do evaluation, and then they'll advertise and show their practice. So a lot of times they would have representatives here in New Mexico that would come and show practices, or they would do it themselves. They would look for an associate to come in and buy in gradually and then sell specifically to that associate. I think right now, the market is very absent of a lot of buyers. I think that the political climate is part of it. I think that interest rates are another part of it. I think the fact that New Mexico even though New Mexico has a lot of things to offer, potential buyers, I don't think that people are interested in moving here because of what they hear in other states of what New Mexico stands for, or how we do business. And I think that that's a deterrent. They're not really educated to, the good parts of what New Mexico can offer a young dentist here. I think that so it's a little bit difficult. We have a lot of people selling. We have a lot of people in the market selling right now. And it's not just us, it's a lot of different brokers have a lot of practices listed right now. And so we're kind of all competing for the same buyer. And so it's kind of just a high competitive situation at the moment. Also, a couple of years ago, I really didn't work a lot with real estate brokers, but because dental practices are selling with the real estate, I've been able to, and I think we should have her on the show too. Her name is Genevieve Posen, and she is a go-getter, and I think she would be really great on this podcast. But I've
Oh,
been
cool.
working really closely with her, and so we tag team each other and help each other with a lot of different types of tools to sell dental practices. So working with a real estate broker has been really helpful this year. I'm really coordinating with her and building our team up for, with our financial advisor, our bankers that we're using. So just kind of redefining our group of who we're going to help, how we're going to help each other through the process of selling practices.
Okay, cool. So, why do most dentists start thinking about selling? Is it always retirement related?
No. We only have a couple of dentists right now that are retiring. Most of the dentists that are selling right now in our market, I mean, I can only really speak to our market because I don't have any practices listed in other states. But I think at this point in our market in New Mexico, most people are selling because they're moving, or they want to do something else with their life. And so we do have a lot of younger dentists selling. So that's kind of what the market looks like right now.
Okay. And then what would you say is the biggest misconception dentists have going into the selling process?
The pricing, their value. I mean, I think that, dentists go in there and they're like, I'm bringing in $1 million, so I should be able to sell it at $1 million, and that's not always the case. I mean, we can put two practices next to each other that have a revenue of $1 million, but that doesn't mean that both of them are equally valued. We do have conversations with our dentist sellers about, if they want to price their practice more than what it's valued and what that means for the buyer. And especially in the climate that we're seeing right now, where we have limited buyers, people are really wanting like a I hate to say this, but they really want, more value for the money. So they're not willing to look at aesthetics over numbers. And so if you have a really beautiful practice, that's great and everything, but they're looking at the numbers first, and that's pushing them to move forward on buying practices. And so I think that getting that number really tied down to what the value is going to really help when selling your dental practice.
So, what are the top things a seller should do before putting their practice on the market?
They need to have a valuation done, and see where they're see where their value is. Make sure that their financials are up to date. Make sure that there's no, tax liens, have a pretty stable employee base. I think that just, making sure that the production stays the same or increases is going to be really beneficial. A practice that slows down in production is going to be valued at a lower amount than like they were a year ago if they were at their prime from production. So making sure that they're maintaining or they're improving their production is really, really important and key. So those are just the stuff off the top of my head.
Okay, so let's say I'm a dentist and I'm planning my exit strategy. How early should I start?
The earlier the better.
So does that mean like 5 years or 1 year, 2 years? How long? Can you give me a ballpark?
It should be at least 5 years. I think
5.
that, some dentists don't. They're like, well, I have another 2 years or I have another 3 years, but really you should start planning within 5 years and thinking to yourself, I'm going to retire by this age and this is what my number is. This is what number I need to get for my practice to add to my retirement, which should consist of multiple different things, not just the practice. But dentists should have more investments than just that to put towards their retirement. And then that's just kind of like the icing on the cake. So they should be looking at that and then getting a valuation to determine where they are at this moment, what their value is, and if they need to make improvements in the next 5 years to make it to the number that they have in their head of what they need to live off of.
So you're saying that the sale of the practice is not enough to retire on, and a dentist should have other investments in play well before
Yes.
they're ready to do
Yes, they
that.
should.
Okay.
They should.
Okay, good. Now, follow-up question to that would be, what role does a dental specific CPA like Bergmeyer and Associates or broker like Finley Bergmeyer Group, how do they play in preparing for the sale?
So we are dental specific CPA, and I can't speak for other accountants that are dental specific. When we produce financial statements the way that we value the practice so that we see all of the operations on the top line of the financial statements and all discretionary expenses on the bottom line. So that when we do our analysis, it's a little easier to look at what the practice's value is on, a quarterly basis or even on an annual basis. By looking at the financial statements, we can kind of eyeball what the finances look like in the practice, if the revenues are going up, if they're going down, what kind of profit margin they're looking at, those kinds of things. So that's how we can help by doing the accounting and giving advice throughout the year and helping with tax strategies and helping with investment strategies. I mean, you probably saw a lot of videos about his oil and gas stuff. I mean, he's really involved in helping our clients maximize their retirement. And that's what I think the benefit would be to choosing somebody like us.
Okay, that's great. Okay, so before we move into valuation and pricing, let's just talk real quick about how important is it to clean up your financials and tighten up
Wow.
overhead before listing?
I don't know, like the question where you're saying cleaning up the financials.
Like, remember, I won't say the name, but there was a coffee shop, and I mean, it's a little bit different. It's not a dental thing, but their financials were the bane of Rachel's existence. Yes?
Mhm. So, I mean, there's different tiers of cleaning up your financials. I mean, there's financials that are just a total mess, and then there's financials that have like miscategorized, expenses or things like that, or they're running stuff through their personal bank accounts and stuff like that. I think that getting with a dental specific CPA so that they can advise you on how to categorize certain things on your financials and make sure that all of your income is coming in the right way, your expenses are going out the right way, and the profit margin is truly what the profit margin is, and not, it's not skewed by misrepresentation of expenses and revenue. I remember a long time ago, we had a client that was receiving revenues based on a 1099 that he was doing, and that accidentally, with one of the other accounting firms, got input as part of his revenue in his practice when it really wasn't a part of the revenue. So just making sure that like things like that are categorized specifically, and that you're really with a firm that understands dental and understands how to do those, how to categorize those things on your financial statement, I think is really key. And then, your valuation specialist, whoever does your valuation, hopefully it's us, but we can kind of make sense of that after, digging deep to find out like what is discretionary, what isn't. But it's just a little easier if you have clean financial statements that specifically are related to your business. Also, some dentists may have two different practices that they run only one set of financials for. What I believe, if you want to sell one of them and keep one of them, separating those financial statements with revenue, income, and liabilities is key because it helps with valuing that business separate from your other practice.
What are the key factors that determine a practice's value in 2025?
Well, it would be income, or it would be
Profit?
well, it would be earnings
Okay.
versus discretionary expenses. And what we try to do is we try to eliminate as many expenses as that we can. We work with you to determine what expenses are discretionary, and then we look at what the earnings are. And we do different types of methodology. We look at different methods to see what method gives the most value. However, because Eric is the certified valuation analyst, he does do his own weightings and he determines what the value is based on what those methods show. So, I mean, it's a very complicated thing that I think Rachel should talk about that part,
Yeah, I
but
wish Rachel was on this call. So, and I would imagine there's similarities regardless of the type of business. If you're selling a dental practice or you're selling a construction company,
mhm.
those key factors that you mentioned, we're going to go a little deeper and I'm going to ask you things like, okay, so let's take into account location, patient base, and the insurance participations that if I mean, do those things, location, patient base, or insurance participation, affect the sale price?
I think that the desirability component of what a buyer wants changes with location. So if you have a practice that's located in the foothills, for instance, it's something that more dentists want is close to the foothills because the demographical income level of people that surround that area are higher level. Then if you have fee for service, it also is important to understand where that fee for service is. Most people that pay fee for service, which means that the practice does not accept insurances, but most practices that accept fee for service only are higher end boutique type practices. So their location is in a boutique area. Like we do have a listing right now in Santa Fe that is a boutique fee for service practice. That is a very beautiful practice that is fee for service. There's going to be a lot of interest in that because it is in a desirable area of New Mexico. We have a fee for service practice that is located at the foothills. That's another area where it's going to be very desirable for somebody to want to take over. Now, fee for service in and of itself, there's a lot of practices who try to go for fee for service because there's a lot of issues with insurances and collecting on insurances. And especially Medicaid practices, it's very hard for dental practice owners to collect on those. If Medicaid changes at all, or if there's some delay in payment or whatever, that it affects their earnings, month over month, and it could hurt their financial trends. So fee for service is desirable, but patients, on the other hand, like dental practices that have insurances, that accept their insurances. And so there's kind of like it's just a balancing act, I guess, for that kind of stuff. So for instance, if you have a patient base that's high percentage over 65, a buyer's going to look at that and say, well, most of my patient base is close to being around for 20 years, so they kind of worry about that if you have a high patient base that's in the higher age rank. Also, depending on what type of insurance, if it's Medicaid, that's another worry that people have. Although Medicaid practices, I do see a lot of Medicaid practices that are really highly profitable, but the doc works a lot in that practice. I mean, it is just, patient after patient after patient coming in. So that's also kind of like the give and take of that type of a practice. Depends on what the buyer's looking for exactly and what type of buyer, because you could have a single person looking for a practice, or you could have a DSO looking for a practice. And it just really depends on who the buyer is.
Okay, now let's wrap this section up, and I'll ask you this. Are practices with newer technology or digital systems worth more?
Yes, they are. If it's used to run the practice and it is something that the practice uses every day to function, yes. A lot of younger dentists want everything digital. They don't want paper files. They don't want, to deal with all of that kind of stuff or paper type of submission for insurance reimbursements. They want everything to be digital so that they can get the information and get reimbursed for that service that they're providing. Where it gets kind of tricky is when dental practices have or buy the highest level of equipment that doesn't directly impact their earnings. So let's say dentists want something that's, high tech that they think that they're going to be able to use, but they're not really using it that much. They're still just doing general dentistry. That piece of equipment may not be desirable for a buyer because it's not being used to operate the dental practice. It might be nice and shiny and beautiful, but that doesn't mean that they need to use it in order to do their job as a dentist in that practice.
Okay, this section here on the actual selling process. So, once a practice is listed, what typically happens next?
So after we list the practice, we come up with a practice summary, market summary, where we put this together, and it is something that's a deliverable for a potential buyer. It doesn't give identifiers of the practice. Even though a buyer signs a non-disclosure agreement with us, we still don't give documentation out to the client or to the buyer with the seller's name or EIN, social address, or anything like that on it. Just because even though at the end, if the person doesn't want to pursue the practice, we ask for the information back, a lot of times they don't give it back. I mean, it's electronic, it's something that's out on their portal. We close their portal out. They don't have access to it anymore, but they could have printed it. They could have provided it to their attorney, those things. We're just very, very, very careful about confidentiality. The only people that get the seller's name and information is a bank that is financing the deal that needs that information. We create the marketing summary. We also redact all financial data. If a buyer's interested, and a lot of times we know who the buyers are, so we know that they've already been pre-approved by a bank. If we don't know that they've been pre-approved by a bank and your practice is valued at over $1 million, we make sure they present to us personal financial statements to show that they can afford the practice and provide us with a pre-qualification from a financial institution. So we vet buyers that way. We present the buyer to the seller once they want more information and wants to tour the practice. We do have some out-of-state buyers that want pictures of the practice, so we have to upload pictures of the practice and production reports and things like that. Just a little bit more information at the beginning of the process so that they get a good idea of what that looks like. And like I said, we have a relationship with a real estate broker who provides me with a market analysis for demographics and for income and et cetera. And so she gives me that packet for each practice. So I'm able to give that information to out of state potential buyers. Usually in state people don't need that because they already kind of know the area. But that's how we market it. We do direct mail. We put it on our website. We have what do you call it? We have relationships with financial institutions that advertise for us on their websites, like Get Provide. And we advertise nationally on DealStream, on Dentaltown, on those types of things. And then we also have networking meetings with different people in our area, such as lenders and other real estate brokers and financial planners, and we meet and we provide them with the details so that they might have a client that is interested in purchasing. So we try to reach every type of way to get the information out without giving the name.
Great, great. So what are some red flags that might scare buyers away?
If the practice is priced over the value, because they're going to know, that's the biggest thing is that, I mean, you may think like you may owe a lot of debt. So you may have a lot of debt on the practice and it's more than what the value is. And so you're like, I at least want to break even on that. So you're asking for 5%, 10% over the value. The buyer's going to do their own due diligence and then they're going to find out that it's overpriced. They probably won't pursue it. So having it priced reasonably within the valuation amounts is very critical. The second thing that would kind of raise a red flag is if the trending of the financial statements is going downward. So if the production isn't staying stable or if it's not increasing, a buyer will be like, well, it looks like this doctor's checked out. Like, I would have to work extra hard to get the production back to where it would need to be so that I can afford my debt service and make a profit and be able to get paid. So that's a red flag too, is if your production is slowing down. The other thing is location. If you're in a really bad area of Albuquerque, that's going to be a hard one. Even if the numbers look great, it's going to be a hard one to sell just because of different people's perspectives on what areas are prime areas and what areas are not, and if they want to have a business in those areas. And so that's another red flag that may or may not. And also rural areas, like if you have a practice in a rural area like Grants or Gallup or something like that, and you're predominantly the one doc that works there, you have no competition and you're killing it over there and you want to retire, people don't want to live there. So that's, even though it looks great on paper, a dentist that's like 30 years old doesn't want to live in Gallup. They want to live in Albuquerque or they want to live in Santa Fe. They don't want to live in a place that doesn't have a nightlife or doesn't have like a work-life balance. Those are kind of the things that I see with those types of practices.
Okay. How long does it take to sell a practice right now?
About a year. It's from listing to closing, about a year. It takes about 6 months of advertisement to get into contract, and then it takes about 6 months to close. That's about as long as it takes.
Okay, short and sweet. Um,
Mhm.
what is the most stressful part for the seller?
Well, because they're putting everything on the line. They're putting everything on the line. They have this idea of wanting to move on, whether it's moving, whether it's retiring, whether it's whatever doing something different, whatever it is, they have this goal of wanting to do that. And so when they have somebody interested, a lot of times they'll put I was going to say the chicken before the horse. Why would I say that?
The chicken before the horse.
Oh my God.
I
Why did I
haven't
do
heard that one
that?
before.
Chicken
Uh,
before the horse. I've never heard that in my entire life. I don't know why I thought that. But they put a lot of weight on that. That, somebody's interested, they looked at their practice, they met them, they're like, they're great, they would be awesome, this and this and that. They're like, they put all their hopes and dreams on that person. And the thing with that is that they have to just continue business as usual. I have docs that as soon as somebody signs an NDA, they're planning their exit strategy. And so I think that's the most stressful thing for a seller is to be calm and conduct business as usual until closing date. Like you, that practice is still yours. You run it, you own it. You have to see the patients, you have to manage the employees until the date that you have that signed agreement and money in your bank account. That's when you can say, okay, I'm going to now be excited and move on to what I want to do.
Should a seller stay on after the sale to help with transition? Why or why not?
Yes, and the reason is because the employees are a very important part of the transition, and the employees are used to working for the seller, not the buyer. And so the seller is going to help with the transition to help those employees integrate into the new buyer's way of doing things. Also, the seller is going to be able to transfer all of the patients to the new owner and give them the wisdom that they have pertaining to each patient. I mean, a new owner may say, I know how to do these procedures, but can you do it at the same rate as a seller? I don't know. Maybe you're faster, maybe you're slower. Or there may be some cases that you have half finished and your buyer's coming in the middle of that and you had complications with certain patients or what have you. I mean, educating them your cases and what you are working on, you're in the middle of, or you finished, is really, really important to that buyer. That's a part of the goodwill that you're selling to them.
Okay, so what trends are you seeing with younger dentists? Are they more open to buying practices now than they were before?
I don't think so. I think
Really?
that they're more wanting to work for somebody because they're coming out of school with a lot of debt. And these practices that, people that are retiring, they just have this view of I'm not going to be able to make a good living for myself unless I work for corporate. And corporate's giving them really good, salaries. So it's hard for them to depend on themselves or think that they're going to make a difference for themselves over working for corporate, that they have this, guaranteed income that's given to them and their schedule's given to them and all of this stuff is given to them. They don't have to worry about managing employees or things like that. And I think that that's more appealing to the younger generation at the moment.
Okay.
Who I'm seeing buying practices right now are people who already own practices. People who
And
already own practices and then they buy a second practice or third practice because they're trying to build their wealth.
so, like, what does the buyer market look like today? Are there more private buyers or corporate players?
Oh, there's still more private here in New Mexico. There's not a lot of DSOs here that are looking at practices, mainly because they're not, value isn't enough for DSOs to want to pursue them. And the seller, even if it is, the seller doesn't want to stay on for a period of time. So there's no like agreement between DSOs. So I think it's more independent buyers other than DSOs that are buying practices.
Okay. Closing reflections. What's one thing every dentist should not do when selling their practice?
They should not slow down their production. They should not try to sell at the last minute if they're sick or if they're wanting to retire like at the end of the year. They shouldn't do that. They should avoid that.
All right. What would you say is your best piece of advice for a dentist who wants to maximize their sale price and walk away happy?
Just like I said before, plan early, figure out what that number is going to be, get a valuation early to see where you're at right now, and then work towards improving that number if it's not where you like it to be. But don't slow down. That's probably the best thing, is just don't slow down productivity.
All right, then let's leave it on this note. Any memorable success or horror story from recent practice sales you've worked on?
Well, there's a success and horror story. I was working on selling a huge practice with the real estate, and the real estate was coming in a value of, I'm just going to use uh, like symbolic numbers. I'm not going to use actual numbers. The real estate was coming in at 1 million, but the seller wanted 1.8. 1.4 million. And she didn't care that it was valued at 1 million, the real estate part. So the buyer of the business agreed that the value of the business was what she was selling it on, but did not agree on the real estate. Well, what ended up happening is he ended up putting in a bid for the 1 million, the 1.4 million, and then they hired a, independent appraiser to come out and appraise the property, and he ended up appraising it at 1.4 million. So that was a success story for the seller because she was able to get what she wanted for the real estate, and it kind of validated her feelings about what it was at. But in the process of the real estate sale, even though the seller was very happy with the job that we were doing for her, the real estate part was not a very successful thing for her. And because I recommended the real estate part, and this was not for Geneve, this was not Geneve, it was a different company that we were using. She had a lot of problems with that real estate acquisition. She was very upset, and she made sure that we knew that she was upset with the process of the real estate portion. So it was a horror story. It was horrible in one side, and it was horribly great on another side of the same acquisition.
Okie
We
dokie.
needed to go with a different real estate company because it wasn't.
I remember that. If it's who I think it is.
Yeah.